It is June 28th. It's Sunday. We are thankful for life. Thank the one above for granting us this beautiful week ahead. And with that being said, we're going to jump straight into the market. So, I found a couple clean headlines this week. It's not just about tech up or tech down. We have some earnings, we have some AI news, some chip news, we have geopolitical risk, all of that going on. The Iran conflict, the Strait of Hormuz is opened and closed. We're going to talk about that. But before we chase any contracts this week, we want to understand that the market has three big stories that it's fighting for right now. Nike earnings, that's what I first thought about today. So I want to see what that does and how that informs the market. Really, I'm not even worried about Nike informing the market. I just want to see the moves that's going to happen on Nike. We're expecting a beat right now. So I'm expecting Nike to rise tomorrow. But the thing is, with earnings being something that's projected to cause a lot of volatility, sometimes people bake in for it sooner. So some people might have already been positioned for this week's earnings last week, 2, 3 weeks ago. So we're going to check out some contracts on that. And then, like I said, we have the headline stories about the Strait of Hormuz. So we're not going to just be looking for green or red. We're going to be looking for what the market is respecting outside of the numbers on the screen in terms of real life events, right? These real life events are what drives the market as well as just the numbers on the screen. So you have to take a little bit of the news, a little bit of the charts, a little bit of your knowledge of the charts, and then your own personal risk reward tolerance. All three of those things have to work together in order for you to trade successfully. So, like I said, Nike earnings is going to be on Tuesday. It's coming after the close, so especially expecting volatility on Monday and Tuesday. And this is going to check consumers. One, Nike is a brand that everybody knows and respects. Everybody loves buying Nike, wearing Nike. So the first thought is going to be, of course, they've continued to go up. And with it being an earnings play, we don't want to get in the IV trap of a bunch of people buying in really quickly and a bunch of people selling really quickly. Oh, the earnings are scheduled to be announced at 1:15 on the 30th. And so I'm expecting whatever happens Monday and Tuesday. If it's bullish, I'm expecting a reversal on Wednesday. If it's bearish and then we have a good report on Tuesday, I'm expecting a reversal. So it really could go either way, especially because people are going to want to collect profits as soon as they get them and sell out if we do have an early expectation rise. And same for if we have a dip before the earnings report comes out, and then we get great earnings and we get a recovery. Just as quickly as we get that recovery pop, people might sell out to protect profit. So really just staying vigilant. And other stocks to pay attention to around Nike would be Lulu, because they're both in a similar space where it comes to athleisure and clothing. And that's really all I have to say on that. Let's look at the chart for Nike. All right, so this right here is a 4 hour. This has been the month of June, the majority of the month of June. From here to here, it looks like we've been on a downtrend. We've been on a nice little downtrend. Let's go ahead and draw this up. There's some parallel lines on this boy. Yeah, you see that? Talking about the Strait of Hormuz, this has been going right in a nice little strait itself. And so tomorrow, we're going to either see a breakout from where we are now, $40.93. We're either going to see a breakout. If we get a breakout above this, what, $41.04 line, I would expect a continuation, honestly, probably to about $42. And the only reason I would trust that though is because earnings are coming up. So people are going to try and get in for earnings. But if we open up to the downside tomorrow, you could just expect it to continue in this downward pattern. And the next level, let's see. Honestly, it looks like we're the lowest that Nike has been in a grip. Yeah, so we're revisiting all-time lows. Well, not all-time lows, but like the last 10 years of lows for Nike right now. Since 2016, Nike has been $40 or more. So we're in a very interesting spot. And this speaks for more than just Nike, actually. This, in my opinion, speaks for retail as a whole in the US because, again, Nike has always been a prominent brand. As you can see, is seeing a lot of success. So for it to be retracing so much makes me a little wary. And if we break, what's this level right here? If we break $40 on Nike, I'm actually scared now that I see this in real time. Mainly just because it hasn't happened in 10 years. So I don't know what that means. You never want to be completely off the chart. Like, you still want something to give you guidance. Is the next level would be $33. If Nike falls $7 this week, that would be crazy. Can Nike do a 7 point drop test? That's my question. Can Nike and will Nike do a 7 point drop this week? And so, yeah, that's pretty much all I got to look for on Nike. I'm going to be looking for it to either break $41 to the upside or fall beneath $40, and I'll be watching for more downside. Anything between $40 and 41.20, I'm not touching. At least I'm telling myself not to touch it. I'm not going to tell you once the market happen, I might not get a little trigger happy and just pull. I'm not gonna lie. I'm not gonna lie. I might hop in, but everything is telling me I shouldn't until above 41.20 or below $40.
Trust those instincts.
No, for sure. And if I did get in, I would really just do a scalp and I would wait for it to either rise. What I would do if I did get in, I would watch the 1 minute most likely, either the one or the five, and I would just wait. You see, like right here, how it broke above and then broke below, and then it rose up and then broke above and then broke below. Like I would look at the contracts and see if it even moved more than $10 in these little moves. And if it moved more than $10 in those little moves, I'd just be looking for one of these red candles down. That's all I would do if I did play in between the levels I just said not to play on. Or if how it broke right here, see it broke 41 20, boom, it danced a little bit and then it went all the way to 41.47 before falling back down. So if we break or get really close to breaking 41.20, I might take a call, but I really prefer to see it at like 41.50, $42 before I got in. Oh, is there anything else to say about Nike? Let's see. I already made, you already know, Zach, but I already made my guidance for myself for the week, and Nike was a part of it. But I,
Well,
s-
I think about this too, because consumer spending is tight. Let's be real. And why would you go and pay $120 for a zip up when you can go on a reseller platform like Pop or Popular, and then you're paying a third the price?
no, for sure. And really, just people aren't too worried about clothes may be the same. And that's why I'm saying it's a testament to the just retail in general, you feel me? And the trends that people are respecting and what they're preferring to do with their money. So it's like if people are preferring to get from the used market, prices are gonna have to, you feel me, change to reflect the level of spending that's happening. Does that mean that things get more expensive? You feel me? Or does that mean they make uh more for cheaper? You feel me? Like it all is gonna have to balance out somehow. And then we already have a lot of material that is being syndicated, like plastics and shit. So do we see a return of better quality material? Or do they keep selling bullshit for extremely high prices? You feel me? Because part of the reason people are preferring to buy off of other markets is because the value in the material is not there either. So it's really going to speak to the comfortability and the like trajectory of what retail even finds worth spending money on. And that's why I was like, if
Look at the whole news market right now. It's probably north of $275 billion this year alone. 2026 projected to probably hit 300 billion. It's raising at a 4x level versus what retail is, which is really slow.
no, for sure. And so, what do you think that earnings is going to show negative info?
There has been a resurgence a little bit on athletic wear. We are going to the summer months. I know golf is incredibly huge. Now without Tiger, that's the other thing. That's been a little bit.
I, I, I
But
don't know how
no,
to gauge
I
it.
like the levels.
Do you think
I
that?
like the levels you talk about.
What do you think about my question? Do you think that we're going to see upside in Nike or downside based off of the earnings report that we have coming up tomorrow or this week?
What's the EPS projected?
An 8% beat, I'm pretty sure is what I saw. I'm,
Hold on, I'm doing some research right now on the fly.
no, all good. Honestly, without doing a bunch of research, just looking at the fair value being $97, but also looking at all the conflict going on in the world right now, I honestly, even if we do have a beat, I still see downside, at least for the first. Tomorrow, I think we're going to either go downside or chop. Tuesday, I think we're going to see downside, regardless of what the earnings say. And then I think it'll
Yeah, I
recover
agree with you.
back to the same level it's at right now.
I agree.
And people might rush to get in really quick. We see $4 or $5 move, and then just as quickly as they get the pop on it, they sell out to protect capital, and then it just balances back out to fucking chop. It's partially just like you're saying. People, like I was saying, people aren't looking to buy new fucking clothes right now. Like, there's more important things to do, and so we do have a retail market. But I feel like the retail market right now is like ages 18 to 25. You feel me? The majority of 30-year-old people aren't going, like you said, and like either they are, I don't know, it's really hard to put into words what I'm thinking right now, because I know me personally, I'm not going to cop the newest Nike shit, right? And all the people I know my age who are buying new gear on a regular basis are not buying a whole bunch of new Nike shit or a whole bunch of new Jordan like that. Like, people are still wearing it, but it's not like it used to be, where it's like people are going and dropping checks every week, every couple of weeks on the newest J's or the newest Jordans or the newest releases. Because anybody who is a true like vet realized, I don't have to get it right now. I can get it later. And the quality, bro. Anybody who's a quality purchaser, the quality of a lot of stuff is poop these days. And I'm not saying Nike specifically is making poop quality, but a majority of the things that I see on the racks these days, reading the material list breaks my heart. And I think other people are starting to realize I can buy an off-brand version and get the same amount of utility for it.
I mean, between you and I, as a consumer, this is just me. I would rather spend my money on Lululemon or Viore.
I've never worn anything Lululemon.
Oh, you are missing out, my friend.
I'm not gonna lie. When I first seen it, they were just making like yoga pants and women's attire, and part of that kind of just turned me off to the whole idea. Even once they started making men's clothing, I'm not gonna front.
I will tell you the joggers that I have, most comfortable ones I will ever own.
Let me see something really quick. Yeah, I'm not paying $130 for a pair of joggers from Lululemon.
Secondhand market.
Oh, it's not that serious for me. As just how there's the Lululemon, there's another like vendor or brand that sells the same quality as Lululemon. You feel me? So I'm I like nah, I'm just look for the same quality somewhere else because it exists, bro. Especially in today's market, a lot of people who are reselling stuff online are just working with the same vendors as other companies. I'm trying to see what the material is on these. It doesn't even matter that much. We came here to look at stocks, not assess the quality of
Exactly.
material in the stocks we looking to buy and sell. Fuck it, we buy whatever we want. After we get a bag about the company we don't. All right, so that's it with Nike. I don't really play Lulu, so I'm not worried about it. I know a lot of people like Lululemon as a stock. I've played it before in the past, but I definitely don't watch it on a regular basis. If you are going to be looking for earnings plays with Nike, please look at Lulu as well. Next, when it comes to AI and chips, AI is still big and there's still a lot of money in it, but now a lot of people are asking who is profiting the most off of it? Is it going to be companies like Nvda, or is it going to be the companies paying for the capex? Like Micron beat and it raised its projection on AI memory demand, while also announcing a $22 billion customer supply commitment. But they don't have all the chips to fulfill the supply commitment. And so that's going to cause more volatility as people are like going to project, okay, where's this going to come from? They're going to speculate what company is going to be able to help with the supply like gap and start investing in other outside AI companies. And when I say other outside AI companies, I just mean smaller names than Nvidia and then Micron and even Microsoft. Like other companies that are tech and AI adjacent might just get called on to help out to fill this gap. And so with that being said, and with everything rotating around AI and people beginning to ask, is it worth the price that it's priced in at? And if so, what companies are going to continue to maintain bringing in revenue from it? So Nvidia, that's my little baby right there. AMD is definitely one to watch when it comes to chip news. Micron, especially because it had earnings last week, is still going to be controlling a lot of where money is going in the market. AVGO, Broadcom, is also very big for figuring out what's going on with chips and AI. QQQ and SMH. So if QQQ and SMH are weak, don't force any calls on any chip stocks or any AI stocks. If we get a reclaim with strength, Nvidia and AMD can be nice bullish little plays. I'm definitely going to be watching Nvidia. I'm definitely going to be watching QQQ. All the other stocks I mentioned are going to be if my wanted setups aren't there. All right, so let's take a quick look at Nvidia and talk about what the expectations are for Nvidia this coming week. And then we can take a look at QQQ as well. And with QQQ, I would look at QQQ for direction news, especially with this stuff going on. Actually, no, I'm thinking about SPX. But QQQ is what we're going to be looking at for directional moves. And so, as you can see, a lot of my levels have already been broken for my previous charting done on NVIDIA. And so we have Zach here who has commented on wanting to figure out more about how I chart the way that I do and what it is I'm looking at. On this 10-minute chart, I'm gonna show you how I do this, bro. And it's honestly so simple. Like, I feel as if I'm not teaching anybody anything by showing them, because you see how zoomed in I am on this chart. We're looking at 1, 2, 3, 4 different days of trading, right? I'm not zooming in anymore before I draw my levels. You feel me? And so I'll go over what I'm seeing after I draw them. So level 1, level 2.
You going live on Discord?
Level 3. Oh, my screen's not live? Yeah, I thought it already was.
Sorry, bro.
All good. You should have been told me it wasn't a. I'm sitting here thinking you see everything I'm looking at.
Well, I don't want to interrupt you.
No, if you can't see it, there's no point in me telling you. But all right, so let me delete those first 2 lines. So this is my chart for Nvidia. This is everything that's been there. You already know for the last couple of weeks I've been looking at Nvidia heavy. And so what I was saying is we can see 5 days. 1, 2, 3, 4 days. And I'm not zooming in any more than this when I first start charting. And so I'm gonna put actually I think all right, yeah. So I'm gonna put a level here. And then I'll zoom in and show you what I'm looking at. I'm gonna put level here, put one here, all the way down here. This one's really easy. You can see this was like near the low of day. There are two candles that went about this low. One went beyond where I'm at, one went right there. So my rule of thumb essentially is I'm looking for places of confluence where at least three candles during intraday trading hit that line, right? And then from there, I zoom in. And so from being zoomed out, I can see just across the board, like this was a clean candle right there, and every single thing this direction also passed through that line or it's set on top of it, and so did right here. And so really I just look for a cluster really quick. Right here I see boom, this is the peak, 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 and then I look to the right and I see all four of these candles in a similar range and these two there. So I know where my eye first got drawn to, those 2 points is going to be a range. And so right here, same thing, my eye saw this peak, there's nothing around it, nothing around it, these three are all around it. Boom, this one right here, this one right here, and this one right here are all in the same range. That's a level because we're looking at 10-minute chunks. And so over the course of a whole hour, it came back and hit this same spot again. And then at the end of the day, it hit it again. You feel me? That in my head means that level is significant because it got hit 3 times in one day over the course of an hour. As opposed to if we go to the 1 minute chart, we got 3 candles in a row that all touch the same line, which watching the 1 minute, I would draw a line right there. That's aftermarket trading, so I wouldn't. But you feel, does this make sense?
Yes.
All right. And so that's pretty much all I'm doing. And then when you zoom in, you see how accurate that was. 1, 2, 3, 4, 5, 6 times. And I'd probably bring this down a little bit now that I'm zoomed in because I want to be on the bodies of the candle. I prefer to touch the bodies of the candle as opposed to the wicks because the bodies let you know there was a decent amount of value in enough people. The wicks being all the way there, it could be one motherfucker just decided to place a dumb trade and they paid that much for it. You feel me? Like they paid that much for a share or they paid that much for their option call and it can push. Like it could be just one whale put a big ass order a whole year away from now when you have these big ass things. Or it could be somebody with $100 million invested in the stock just withdrew. And that's why we dropped to 191. So like I don't like going beyond the bodies if I can avoid it. But I will include the wicks, like this one right here. This is the end of the wick that I went to. And if you look at the next day, multiple lines, you feel me, hit it. So it's like I will use wicks. I don't look for wicks. I look for the body. But I also like to start zoomed in like this. And then I zoom in and I adjust. And then from there, I have my levels from last week. We opened up here, we broke all the way down here, and this is where we traded at for 4 days. So for this week, I'm not looking at anything else in the past. I'm going to see when we open, do we retest 192, 412? Do we break it? If we break below, we're going to 191. From 191, I'd have to zoom out and go to my 4 hour and rechart.
Over it.
And actually, I don't even have to rechart. I'm already
Get
there.
over it. I'm not going to call it.
Hey, man. Say, man. Hey, please mute yourself. But was that? Can you still hear the Shay?
Yeah, I can still hear, but he's not on mute.
All good. I was about to say I muted him. I didn't know if you heard me or not. I was gonna say let me know when you come back so I could unmute him. But and so
Sorry, I was putting my time to bed.
all good. And so on the 10-minute, like I said, I don't have anything projected after 191. But when I go to my 4 hour, I already have it charted up. If we cannot find any area, let me see. Let's see. Yeah, all honesty, I think we open to the downside tomorrow. Because the reason we don't have anything beyond 191 right now is because the market closed, not because it found support. And so without putting that level there to try and figure out what to expect it to break tomorrow, I would just say look for downside to 185 on Nvidia. If we cannot, uh, not if we cannot, if we open down, if we open below 191, just look for Nvidia to go to 185. And these lines are levels that I've had for months. And the same thing with these levels here, you feel me? But they've been hit once or twice before, so I'm leaving them. Other levels that I drew in the past, I leave until they start to like pile up on top of each other. And I don't draw new ones either until they surpass what has already been there.
Okay.
And so yeah, I'm looking for Nvidia downside 185, 180. If it could break 180, we could go to 165. I wanted to go to the upside, but that's what I want, not what I'm expecting. I don't know what to expect. If we do break to the upside, 196, 200, 210. If we go break and hold 210, we got 215 to 220. So if we open up tomorrow, we can hit as high as 220. If we open down, we can go to 165. I'm prepared for $30 in either direction. And that's something I had to learn to do. Be prepared for the up and downside in any direction at any given time and actually have it written down. Because there's be times where I knew we'd go into the downside, but I wouldn't know how far. And so I would sell out early. Or I was like expecting room to the upside and I didn't know that it had a certain support level that it already had failed and it was going to keep falling because it failed support. So being prepared for both sides as far as I won't say as far as you can, but I think a 30-point break on a stock like AMD or Nvidia is good. Because the last couple of days it hasn't really even been making more than $5, $10 pops. All right. And then to go alongside with Nvidia, we're going to look at QQQ. And so for QQQ, we're going to be looking for strength. This is going to be our market compass right now. And preferably going to look for contracts that are dated for next month. The 10th or the 17th is what I'm going to be looking for. We're going to take some swings this week, maybe try some swings. And so again, I'm not even going to rechart anything. These levels are already here. So let's look at what happened this week. So this is what I had from the week before. It broke out of that level, continued up, boom. It had the same support and resistance with 3 different lines. It broke it, boom. Same support and resistance. It tried to break this. If anything, I could bring this down some and say this is my new level of resistance. Because if we break 745.29, I know if it holds, we have more room to the upside. Or I can leave it where it's at because none of the times it even got close was it able to hold it, right? So I can just say once we do break 748 that I know it can hold. You feel me?
Mm-hmm.
And then the rest of the week, we have this little gap down. And so I really wouldn't be surprised if on Monday we see it rise, refill this gap, and then decide what to do at this 735 level. As on the 4-hour, we're still sitting above, what is this, the 250-day moving average, I believe. Yeah, that's the 250. And then let's see what we're looking with on the hour. All right, so we could chart up the 15 real quick. And so you see this circle right here, it had a gap to fill. It rose, and then it fell and refilled that gap. And then it came back up and then it gapped down. And that's why I'm saying I wouldn't be surprised if it gapped back up. Because the same way it had to fill this gap and it did it with these big ass candles right here, boom, 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 is going to have to fill this gap to the upside and it might try to do it with some big ass candles just like these. All right. And see, bro, I don't know why it'd be. You see, I didn't do that just now. I just clicked the right spot, and the rest of my levels showed back up. I was getting ready to recharge. So yeah, what is this? 706. Let's go to the 5 minute. Bro, why is it tweaking like this? I'm not tripping because I have all these levels. It's just annoying because I'm thinking I gotta go do something more, and then I could zoom in and zoom out. Boom, all my levels are still here. All right, so looking at this right here, with the news that's going on, and the last thing that I saw was talking about peace with the Middle East again and Iran, I won't be surprised if we open up, even if it's just a little bit. Probably 708, 710. And then from 710, I think we go into this chop zone between 712 and 714. And until we get some good news, or whether it's good political news or good news on a major AI company, I think we just chop. So yeah, I think we have upside about 4 points, and then we see chop without good news. With good news, we can go back to 720 tomorrow easily. And then if we have great news and no more conflict, and the S&P 500 goes green, we could see 730, 724 easy. Because this gap does want to fill. And you see it broke it in one big ass solid move. That's a 20-point
And you're
growth.
talking contracts to 710, 717.
I'm saying in general, we can see a move like that, but the best delta on the contracts right now are 710, 717. And it's a little safer with the level of volatility going on. I'm probably going to play weeklies, but 710 and 717 are the much smarter play. So I'm not telling you to do what I do with this one. I'm telling you to do as I say.
Hey, you know I'm a SoFi watcher, so
I still watch SoFi myself, dog. I like SoFi. SoFi's not a bad play. It's just being aware of the ranges.
I'm telling you, it's going to consolidate to about 1750, and I don't think with as much that Moto has put back into his own company, they're not going to let that fall below 1650 again. Maybe 16 might be the low, but it's only up from there based on the technology that they just rolled out.
When?
So they're trying to make themselves like an all-purpose financial institution with student loans, personal loans, even investing. So now they have an AI investing tool.
How new is this?
Within the past week.
I'm gonna look it up in a second. Why'd I open the SPY? I mean, I know I opened it because I think I meant to open the S&P 500. I just said if we could get a big green move on the S&P 500, we could see a big recovery on QQQ. Well, we could go ahead and look at the SPY, and I'll open SoFi. So right here we have a triangle, and so based off just what I'm looking at, I think we're going to try and fill this gap. I want to intellectually, I want to say no, but my gut is telling me we're going to try and fill this gap back to 740. what is this? 743. I think that's what SPY is going to want to try tomorrow. Is it going to work? I'm not going to say yes. But I know the fact that they're saying talks of peace is going to make things go green a little bit. How much and can it hold is my only question. And so tomorrow I'm going to be looking for SPY to break out of this range. And if it breaks out and breaks up, I see 735 very easily, which is crazy to say because when I first started trading, there was no way you could get me to bet money that the SPY was going to move $10 in one day for no reason. You would have had to fight me in order to get me to bet you that the SPY was even going to move $10 in one day and it'd be considered normal market like trajectory. That shit is still weird to me, bro. But yeah, so I'm going to be looking for the SPY to touch 732, test 732. If it could test and hold 732, we got room to 734 range. Or 733.95. And then if it could hold and break 733.95, we can go to 73 or 736. And then if it really wants to, you feel me, act up, it could go back to 740 where it was at just what, the 22nd, 6 days ago. So the end of last week, not this week, just past, but you get what I'm saying. A week ago. No, this was this past week. So it ended last Friday, not this past Friday here. And then it had this big ass gap down at the beginning of last week. But like I said, be prepared for the downside as well. So if we open down tomorrow, we're going to 728. If it can't hold 728, we go into 726. And at the end of the day yesterday, it went to Friday, it went all the way to 716. So beware that 716 is not out of the question. And looking here, I see more red actually. Yeah, we might, if we break 710, we could go to 700. I'm not comfortable making any projection until I see volume in RSI tomorrow because it's really anybody's game. Oh. And so the Strait of Hormuz matters because of oil and inflation and Fed pressure. All that is going to affect the SPY, is going to affect QQQ, and is going to affect the S&P 500. This strait carries 1/5 of global oil and petroleum products and around 1/5 of LNG trade. I don't know who LNG is. But LNG, I'm assuming, is an oil company. And so every US crude oil company is going to be affected by what goes on with Iran and Trump in this peace treaty or not, and whether or not that strait stays open. And so as of right now, I saw today that they're announcing that they're going to leave it open, partially because they don't want more airstrikes and more pumes dropped on their heads. I don't even want to get into that. We're going to keep it strictly charted. Strictly charting. Oh, we looked at the SPY. We looked at QQQ. Let's go ahead and chart the S&P 500. And honestly, I'm probably going to take something on SPX as well, just because I've had some success at the end of last week with it. I've always liked it. It's a quick mover. You can get in and out, make a little bit of bread, and take your ass back to sleep. So my goal with this is to make $150 within the first hour of being awake and go back to sleep. I think that's a pretty fair goal. All right. So if we open down, we can break 7263. That's crazy. I don't even want to look at the 4 hour right now. Let's zoom in a little bit. All right. So on the 26th, we went from 72.94 as high as 73.90. So about $100 worth of range on the day. All right, so realistically, for a move on this, what I'm going to look for is a lot of volatility and quick moves. If I see something like this happen, 7294, break all the way back to 7321, I'm getting in. As soon as this candle starts to retest this 7312, I'm getting back the fuck in. And I'm just going to ride this up before it even gets to 7335 because I'm going to trust that this green candle is going to hold through. Once I see the second 15-minute green candle go green, I'm getting in. And then I'm getting out as soon as I make 50 to $100, which you can make 50 to $100 in $2 or $3 moves on this thing. And like I just said, this from here to here was $34 move. So, and that's why I like SPX, but that's also why it's dangerous because it moves that quick. So imagine you got in here as this candle was at the peak and then it fell and then it continued to fall. Like, let's look at this on the minute chart. So yeah, imagine your contract fell 100 points. What is this? 30 points in 1 minute. You would be sick. You would be very sick, especially because that's the end of the day. Or right here, your contract falls and continues to fall and continues to fall. You feel me? So this is really a momentum in and out. Scalp daddy. At least that's how I play SPX. I don't do swings. I don't do long calls. I don't expect to hold it for more than 30 minutes. Will I hold it for more than 30 minutes if I think I'm right and if I have strong confluence to support it? But most of the time, if I'm playing SPX, it's a quick in and out, in and out. And if you look here, though, we have the same thing going on that we did on, what was that? What was the first thing? Nike? Was it Nike that had this little downward trend going on? A little straight? I think
Yeah, it did.
so. Oh, this is a little wide, but it is there. But yeah, see this little downtrend right here. So if it hits 7381 and it can't break out, it's going to the downside. I'm gonna put a little price tag right here. 7381. Bruv.
So, are you gonna set either alerts for yourself, or you're gonna like buy in at a limit order here?
I just buy market orders for real, bro. And I just wait for confluence on what I'm looking at, and I just go to look for it in real time. If I miss it, I miss it because I missed it because I was looking at something else on my list.
Okay.
Yeah, and it's all everything I'm saying right now is like speculation. So I would just wait for confirmation for any of the things that I'm saying at the beginning of the market, and then I would start looking for how I want to set up. And that's why I do the cheat sheets for upside and downside, so I'm prepared for whatever I see in real time. I don't know how I ended up back on Nvda. And bro, didn't I just chart up the 5-minute chart? This thing be blowing me when it gets rid of my lines. Cause like I'll click just on the screen and they'll all come back. So I don't know why they go away. I mean, I guess it's not the worst thing in the world. It keeps my levels fresh. but I swear I already did this. All right. So that's Nike. We did SPY, QQQ, S&P 500. Um, Oh yeah, other things to keep into consideration. It's a holiday, so we have a shortened week. There's going to be a lot of people probably selling out of positions on Wednesday and going on trips for Thursday, Friday, and Saturday. So be prepared for a little less volatility in the market. And that means to just protect your options a little bit more. Less volatility means less people trading, which means less opportunity to sell if the time does arise. But yeah, I think that's it that I have to talk about without having any questions or anything. The first thing I'm going to be watching tomorrow is QQQ and SPY for direction, SPX for direction, of course. If QQQ is weak, I'm not going to take calls on Nvidia, most likely. I probably won't take calls on AMD. If QQQ is green, if SPY is green, then I'm going to be looking at Nvidia. Tesla, that's my baby right there, but I'm kind of in between on it, partially because of so much Elon news over the weekend and because of SpaceX. With the SpaceX IPO, a lot of people bought in and then sold out. And then with the dip of $100, people are like, oh my God, it went up $100 and went down $100. Yes, bro, it's only existed for 2-3 weeks. So with that much volatility, people act stupid. And so I'm expecting a lot of people to continue to stay away from Tesla because they're scared about it. You feel me? But with that being said, Tesla also has been in talks with Uber for a long time about getting automated robo taxis. They had an article come out about that. I think it was on Friday or Saturday. And that is one reason I would be looking at Tesla for a little bit of volatility. So actually, yeah, I'm going to go ahead and get into Tesla before this is all done. But yeah, first thing I'm going to be looking at is QQQ, SPY, SPX. Look for market direction, look for market decisions. I'm going to keep my eyes out for anything else talking about Iran and the Strait of Hormuz or any type of conflict and possible wartime tensions. That's going to affect oil. That's going to affect pretty much every sector because people are going to go crazy and want to protect capital and take their money and put it here, take their money and put it there. And then we're going to have a little bit of news that could possibly affect inflation. And oil always coincides with inflation. If oil is up, people feel a certain way. If oil is down, people feel a certain way. So Nike is an earnings play. It's an event, not a random gamble, but I'm going to look at the confluence between how many people are in it already. If we have an overestimated amount of people on RSI or any puts or anything or any calls or anything, I'm a volume and momentum trader. So I'm looking for the volume and momentum. I'm looking for where people are and where they're scared or where they're excited. So the goal is simple. Don't try to predict every headline. Look at where we could go and then react to it based upon what the market is actually pricing in, which is why I didn't mind the Fed chair's talk. I just don't like the fact he didn't give any type of guidance or consolation or make anybody feel good. He said, pay attention to what people are paying attention to and move accordingly. And that's what the fuck I'm gonna do. So let's look at Tesla. All right, Tesla on the 4-hour. Let's see. So we broke one of our zones this past week to the downside. If Tesla continues down, we can see 364 to 358. If we recover, I want to see Tesla. No, it's not 390, I believe. I believe we had a level at like 383. Yeah, 372, 386. Yeah, so if we get some upside on Tesla, I'm going to be looking I'm so confused. I know I'm not tripping, bro. Am I? I thought my next level up for Tesla was 382 or 383 and then 396 or 386. That's the reason I'm reacting like this. Is right here it is. Maybe I just remember from what I was looking at. Here's 382.57. So I would want to see it break 383 before I would get in. I'm gonna draw a line at 382.97. I want to see it break that. If it could break that, then we have room to 385. If it breaks that, then we're going back to 390. And if it continues to break 390 and hold, we have room to 396. Let's look at some news. What is this? You can't see this article, can you?
No.
That's boo-boo. Yeah. Bruv. All right. So US margin debt, or what investors borrow from their brokerages to buy securities, rose 54%. $1.4 trillion in May. I'm not gonna lie, I'm not about to read this whole article. I'm about to put this into ChatGPT and ask it to tell me what this means for this coming week and what I should be looking forward to based on the trade plan that I've already been talking to you guys about for the last hour. But that is very interesting. It's talking about ETFs being over leveraged and a lot of let me see. It says leveraged ETFs allow anyone with a brokerage account the chance to supercharge their exposure to the stock market that has been posting gains not seen since the dot-com bubble. But what goes up fast can crash down even faster. So, South Korea's top financial regulator said earlier last week he regrets not blocking the launch of leveraged single stocked funds. He said these are high risk products, and it seems like 92% of holders are retail investors.
Oh boy.
And so
Oh,
part of the
boy.
worry is with Korean semiconductors and things like that being involved in the like ETFs, that retail is going to get fucked up, or that they're going to
Well,
start selling.
think about DRAM, right? There's holdings within DRAM you can't buy on U.S. markets.
It says $1 trillion borrowing binge. Yeah, and so this is what me and Jordan have been talking about. It says the market is fragile because a lot of recent upsize has been helped by borrowed money, leveraged ETFs, and forced hedging. Oh, we'll see. Momo says Tesla to the downside. Hmm. Oh, anything else you want to look at?
SoFi.
So, yeah, we played that range beautifully. Bro, this is literally exactly what I told you on Thursday. I didn't know, you feel me? But this line was here, the 1797. Oh, without seeing what's gonna happen during end of the day tomorrow, I don't know. You feel me? It's like I said, it like 1770, and it doesn't like going below 1750. But if it does, it's going to 16. I don't see it falling below
Yeah.
$17 anytime soon, though. It has
Yeah, see,
one,
that was my
two,
thought
three,
too.
4, 5, 6, 7. It has 7 levels below $17 to go. But without having any news on it, I don't have really a prediction outside of just my levels. So if it can break 1790, it can go to 1806. If it breaks 1806, it's going to 1820. And then from there, the next level is 1843.
Yeah, I'm talking swing here. I'm talking at least a month out. So
You just pick a
with their
direction.
new AI, they bought an AI company, and when they rolled out this AI investing platform now for users, you can basically type in a strategy, and it will help you invest along the way. But it looks right now like it's consolidating to about 1750. If that works out, they could gain another 50 million users.
I'm telling you, I see it going to $19, $20 very easily. So it's really just a matter of picking a swing that you feel comfortable investing in and holding.
Didn't I tell you? So far to 20.
I told you first.
Yeah, and then I put in puts and lost my ass on that one.
Well, I mean, nah, puts are still on the table anytime it gets to $18 or near it. You feel me? So it's not a dumb move. Like record shows, it flushes between 19 and 1650 quite regularly.
Oh yeah, no, I put my put in the wrong place. That's the only issue. And they know Deshay over there is over there flaunting how much he's making.
The play's still there. It's just a matter of timing. And the question is, once it does take off, will it ever actually come back down for real? If you really wanted to get into it, I would look for what contracts have the most open interest and volatility outside of the next like 4 weeks.
Yeah, that's what I was looking at on Friday.
That would be the best way to go about it, I think. And actually looking at the options chain and what's there. What is that?
SoFi's stock is currently around $17.88. It has a lot of call options open between $18 and $19, with the most interest expiring on July 2nd. If it breaks above $18.50, it might push toward $19 or $20. However, if it fails at that level or the market weakens, it could drop toward $15 or $16. The plan is to watch for a clear breakout or breakdown before committing and keep trades relatively short-term due to volatility.
I concur. Only thing I would say is I wouldn't be too worried about going a month out as long as I stayed within that $16.50, $19 range.
So with SoFi currently around that $17 to $18 range, it's clear that options traders are quite active, especially around near-term strikes. The July 2nd expiration has been hot, but since you're looking a week to a month out, you'd likely want to look at the next cycles, probably mid-July or even into August. Focus on strikes near the money, like $18 or $19, where both open interest and liquidity tend to cluster. These will give you better fills and flexibility if you need to adjust. Also, implied volatility will likely remain elevated given market conditions and the attention on tech stocks. So, if you're slinging, consider spreads or defined risk plays to manage premium decay. And keep your eyes on overall market direction because leveraged flows could make moves sharper on both sides.
I did not realize I turned the talking version of that thing on.
Oh, it's phenomenal.
I honestly thought that was your computer the first time it happened.
Nope.
I was like, did you not hear me? I was like, what is that? And before it started talking, I heard the do-do-do-do. But yeah, Mumu says more downside on SoFi. Oh. I've liked SoFi to $20 since last year, though.
I just got to break out of that like 1850 range.
I literally live like, I'm not gonna say it, but yeah, I live. I'm not even gonna say nothing. All right, guys, that's pretty much it from here. That's all the main points. I don't have anything else that I was looking forward to this week. I'm going to be looking at QQQ, SPY, SPX. Definitely going to look at Nvidia. I'll probably peek an eye in on Tesla a little bit. I don't plan on playing it. Apple, I've been being the Apple whisperer lately. Might not play it, but yeah, that's pretty much my watch list for this week. I like Nike for earnings and Lululemon for confluence around Nike. SoFi, I'm a long believer in $20 and up for SoFi. I might not watch it this week, but yeah. It's pretty much where I'm sitting on the market right now. I think that with all the news going on, we're going to get shaken out a couple of times, and ultimately, a lot of things are going to end up in chop mode. That's what I think. And then we might just get this big ass sell off that we've been waiting for the last